There's a phrase I hear a lot in business conversations. It's good enough. Good enough books, good enough reports, good enough visibility. And on the surface, that sounds reasonable. Most business owners aren't trying to be perfect, they're just trying to keep things moving. But over time, good enough becomes expensive. Not all at once, quietly, in the decisions delayed, opportunities missed, and the stress that never quite goes away. Today, we're talking about the real cost of good enough financials and why tolerating small inaccuracies often lead to much bigger consequences. Let's dig in. Good afternoon, friend. How are you?
I'm doing great. Welcome
Good.
back, team.
I know. I cannot believe we're on episode 8. And for our listeners, I think it's super important that they know we're not super ahead of filming. So it's March 14th. And I think this goes live the end of March, maybe the first week of April. So we're only 2 to 3 weeks ahead of schedule. But we just got through a pretty big week. Do you want to
Yes,
share what we have been working on this week?
yes. Well, it's not just this week, it's a lot of weeks leading up to a finale this week. But we have just almost concluded working on some final pieces this weekend, but essentially we finished a huge milestone of our tax season. So Cash has been, her business has been contracted out to help the organization that I am helping kind of help them get through tax season. So it's been a hefty several months. We have I want to say maybe 30 big projects, 30 properties that have a lot of sub LLCs within them, like maybe 3 to 4 LLCs within. So, as far as investor K1s, like we're talking thousands of K1s that we're reviewing and property financials on the tax return. So, it has been an adventure. We both have stayed up a lot of late evenings. But I do want to give you a huge shout out and thank you to you because there were, I want to touch on the comment that you made about. Can I touch on something?
Go ahead. I'll brace for impact with our listeners.
I'm gonna touch on the decision that I proudly made to have my wonderful controller take spring break with her family. I do want to say that if it wasn't for you and what I have contracted out with you, then like it would not have been possible. So I just want to say a huge thanks because, like I said, it was a lot of late evenings for us. I was trying to show at least one early day for my wonderful controller to enjoy spring break with her family because we both have pulled insane hours just this whole quarter. And her boyfriend was visiting from New York earlier in the quarter, and he's just kind of been stuck looking at the side of her head because I've been pulling her into like these crazy workflows and working late. And as much as I hate when my workers work late, like we just had to be done for the business, and so I wanted to take some of that front load myself. And because I knew that I, contracted out additional help, we were able to let her jet out a day early. And I'm very grateful to you for that. She so deserves to enjoy a spring break with her kiddos. And, I was very happy to give that to her. So thank you very, very, very much
Oh, you're
for
so
making
kind.
that work.
I wasn't sure where you were going to go with that, but I'll give the listeners like the full context. So typically in businesses and in almost every business that I've worked in, we called them blackout dates. And so you look at the calendar and there is this season, whatever it may be, a couple days, a week, a month, or what have you, where you just don't grant PTO or vacation time or whatever the business tends to use for vernacular there. But you have these blackout periods and it's just, that you can't because the needs of the business during that season are so high, you just can't grant it. In the manufacturing world, it usually, unfortunately, was the last couple of days of the month for inventory, ensuring
Mm-hmm.
that the inventory matched the balance sheet. And so yesterday, as we wrapped up, I had sent Sassy a text saying, I'm so glad that we were able to get through this. But you are a better boss than me, because I would not have let my employees take this day off. And then of course you so graciously like gave me the context behind it. And she's worked really long hours. She missed seeing her boyfriend who is visiting from New York and everything. And so instantly I was like, Cash, you totally went in the wrong line. This is what happens, why you don't assume things and you hear the whole context. But a testament to you and just being like a really good boss, and just another reason why I highly respect you as a business leader. But another thing that I really do want to mention is, we've talked about this in other episodes before, how we met really because of this business we worked on these K1s for.
Mm-hmm.
And when I came in, it was before you. And
Mm-hmm.
and that first season of doing K1s was so unorganized. And I kid you not, that first year, that week, I probably worked 90 hours. I mean,
Mm-hmm.
I was really the only one reviewing
Mm-hmm.
the K1s. And when I say 90 hours, it really was 90 hours. Like, it
Yeah.
was going to bed at midnight, 1 o'clock, waking up at 4 or 5 and going right back. It was
Mm-hmm.
literally just like a 4 to 5 hour break to rest your eyes because they were just glazed over. And then you were right back at it, because there's such tight deadlines of
Mm-hmm.
the CPAs get you these tax returns in K1s, and you have to review them and turn them back within a week or less. And they have to be accurate, because when we're talking about thousands, these are investors where it then has implications on their personal tax. So they have to be accurate. But something that I was so proud of you is how organized the system that you've created, the spreadsheets that you have created. It was so
Thank you.
efficient, so fast. Even though we went through thousands of K1s, the amount of time that was spent on it was a fraction of that first year. And so kudos to you, to what you've done and what you've built, and the
Awesome.
efficiencies that you've created within that business. But
Thank
I
you so
also think
much.
that segues into kind of our topic today of good enough, because
Mm-hmm.
the way we did them, years ago when I was the person doing them, was it was good enough, right? We got through them, and we had a celebration at the end of the week. And you took that and said, this may be good enough, but it is not good enough. And you really have propelled that forward. And so I think it's just a beautiful segue into kind of what we're talking about today. Is good enough is not always good enough.
Yes, let's dig in. So first of all, to just start with the example of kind of how this K1 audit even transitioned over time, because yes, I do remember when you and I first trained on it. Number one, I had time against me. I didn't have you. You warned me that I will need to hire like probably 8 part-time people, or at least 4 full-time people for that time period and stuff. And so, and in year one, we kind of replicated how it was done in the past. But then it gave me some substance of like, okay, these are the things that are taking the longest. How can we streamline those? But and I improved it over time. Like in the first 2 years, we did not review the actual financials. And here's a side comment to everybody else. All of this K1 project and a lot of like what the problems that the CFO solves, they are all risk assessments. You're constantly making an assessment of how much of this do I need to do to protect the business? And so like with the K1 reviews, the goal is not to reproduce your CPA's whole workflow. That's why they have the software, they know the tax rules and all of that. But you need to, at some level, like help them out with, for us, the on the first year, the priority was on, here's a list of our investors. These are the demographics of them. We want to make sure that we are, address all their mail changes if they transferred their ownership to somebody else. So like all of these things that will have the most gravity in getting a returned K1. Hey, you need to correct this. And with more time and bandwidth, and as I had more time to prepare for the tax season, that's where I implemented, okay, now we're actually looking at the financials and we're tying out, and then even and I had to make a call during this season of, okay, well, these certain properties have these way complex structures that they have 1031s in them and blah blah blah. So it's not a straightforward calculation that a template can help us figure out, because in this instance there are different things rolling into somebody's tax like paper ownership. And so, I have to make a call at a certain point of like, well, I'm not going to recreate the whole damn workflow for my CPA. So at this point, like, I'm just going to collect their work papers of how they were brought to the logic, and file that with my due diligence of the backup for the tax return, So you have to make these calls of what is good enough, like what is going to protect me from the ultimate risk, and what is my ultimate risk versus, are we just spending more cost and time into something that's not going to gain us? So that's kind of one side of the good enough. One other thing that I want to just transition into, and this kind of all flows into me being bogged down with this tax season and really like not making time for something that is absolutely crucial for the business, and that is kind of revisiting our I haven't touched our cash flow, our cash burn forecast since mid-January. And, I remember like, well, we had a certain runway, blah, blah, blah. I should in theory be safe. But as time is passing and I need to kind of give the owner an understanding of where we're at with cash, how we've made some operational changes, like does that influence it? And this is where like the good enough financials are not good enough. I am telling him like, I cannot give you an answer until I'm done with this tax season, because if I'm looking at the bank account balance and I'm like, oh yeah, we're totally right on schedule. Well, no, like as we mentioned many, many times in the past, cash balance alone does not tell you what your standing is. You don't know what you haven't, if you're past due on bills, if that cash is accounted for, so this is one of my current pains right now, is that I've been sitting on this, like I've tried to find several opportunities to work on this gosh darn cash flow projection, and I keep putting it away because in this case, the good enough of like, yeah, let's just wing it, give him an idea. No, I can tell him, if I don't put the focus time into this project, I'm going to absolutely misspeak on what our actual runway is.
Yeah, yeah. I think I've talked about the wolf like fix it later mentality multiple times in different episodes, because it, it's so relevant in every business. Like you have seasons of busyness and chaos that things do fall through the cracks and timelines get delayed, but it never is good. And I'm glad that you stuck to your boundaries and I can't give you an answer, and here's why. And knowing who that is that you were talking to, I would imagine that he took it very respectfully and like, thank you for giving me like honest feedback and not kind of giving me this BS answer that's going to get us into trouble later. But I do know of so many situations and so many controllers or CFOs or bookkeepers that will give that blanketed, yep, we've got, $50,000 in the bank, go ahead and you're good. And then when the reconciliation, when the cleanup, when life kind of slows down, workflows slow down, you're like, oh my gosh, I let you spend that $50,000 and I totally forgot about XYZ. So, the we'll fix it later, it happens in every business. Like a lot of things in my own firm were kind of put at bay this week due to the K1s that we were working on.
Mhm.
But now this next week, my calendar is completely blocked off to start fixing some of the or catching up on some of those things from last week so that I can make those
Mhm.
educated decisions. And like you said, like I've had some of those hard conversations. They're not always easy to say, I'm a little backed up, but 100% of those conversations that I had this week, they understood when I said, S Corp deadlines are next week. And so there is no wiggle room on this.
Yeah.
Your reconciliation is usually done by the 10th. Unfortunately, this month it's not going to be done until the 20th. And here's
Mhm.
why.
Mhm.
But I also, in those seasons, you have to understand like this week, yes, we put in a lot of hours. Next week, I'm going to put in a lot of hours in the cleanup, and there is reprieve on the other side of that. But you cannot continue to delay. You have these seasons where you have hard weeks and they may stack on top of each other. There is reprieve on the other side of it, but one of the biggest mistakes that I see so often in business leaders, business owners, and businesses in general is we'll fix it later. We'll kick that can down the road. And what happens is that cleanup compounds, right? It's now
Mhm.
not just February that I have to close. It's now February, March, and April that I have to close. And so something that would really take a couple hours or a day is now going to take me, it's not 3 days because they're
Mhm.
all done. It's now like I have to do all of that. Now I have to do the quarterly stuff. And so this compounding effect. But the air of that, I just had a client come to me who I want to be careful because I don't want this client. This client does listen to this podcast. So they will know who they are. But it kind of goes back to our last episode and like understanding your financials, but also when you just kind of delay them down the road is he hadn't had his books reconciled since 2022. And so
Mhm.
at the end of the year, the bookkeeper CPA was doing like very large, like we're talking hundreds of thousands of dollar journal entries to
Mhm.
tie everything out, but they weren't tying it out to the penny and nothing was actually getting reconciled. They were saying
Mhm.
this was the bank balance as of December 31st. And so we're going to do this journal entry to reflect that that's the bank balance now. And they were doing this at the end of each year, and I'm like, that is so. What happened was then I started digging into those financials and saw what they were tying them against. I still don't understand it, but they were tying it against equity. And so
Mhm.
what was happening was, the first year it wasn't huge. It wasn't a huge situation, but now we're 5 years into this and it's a material difference. It
Right.
shows that he has pulled way more money out of the business than he really has. Now we're doing real cleanup and he's going to have to amend tax returns, which
Mhm.
are,
Mhm.
are a headache. But all
Absolutely.
this to say, if you are doing your books every single month, if you're cleaning up and reconciling to the penny, without a reconciliation discrepancy GL account, yes, you are going to pay money. A good bookkeeper is going to be anywhere between $300 and $750 a month if they're just doing bookkeeping. But when these cleanup projects come to me, I will say, it's going to be $5,000 to do whatever the case may be. Those are ambiguous
Mhm.
numbers. Again, don't take those to quote, but it's going to be a couple $1,000s to do 5 years of cleanup. And they're like, what? I'm like,
It's the cost of half-assing.
yes, if you take 300, if we take the low end, you take $300, you extrapolate that over 12 months, that would have been $3,600 for the year.
Yeah.
So you're actually
Mhm.
getting a pretty good deal out of this. But
Yeah.
to the point, you cannot look at your previously, he could not look at his financials and make a sound decision on
Mhm.
anything in his business.
Mhm. A similar, very, very similar situation here. I have a friend who owns a business, and she's always kind of been a solo kind of everything. She's the salesperson, she's the estimator, the measurer. She even lays some tile herself sometimes, she does all of her bids and receivables, kind of everything all in one place. And unfortunately, it's she has uh, had workers before, had bookkeepers who just were not didn't do their due diligence. And even the outsourced help that she was getting was, from a friend, and so not really holding them accountable. And when I just glanced, she's like, Sassy, help me make make my books make sense. I'm looking at her history, and I'm even just like starting with, okay, let's start. What do you have with credit cards? What do you have with bank statements? And to your point, I'm seeing all of these unclear transactions from like 2020. And I'm like, you have deposits here that like, do people owe you money? And then drilling in, and it's like, no, this is the way that my accountant told me that I need to do this credit memo. And I'm looking at it and I'm like, how in the junk would it ever touch, like, this transaction is implying that you have received cash but you're holding on to it, and
Mhm.
so so basically, and she's I just feel so bad, like she's always in this constant frenzy of like, well, I don't have time to figure this out, like fine, like I'll look at it later. And
Mhm.
Cash, I handed her off to another friend of mine. It was before I knew that you started your business.
No
Otherwise, I
worries.
I would have absolutely had her take some pics from from my contacts. But in any case, yeah, this has always just been her, because she's only accountable to herself. And that's where I feel like when you are only accountable to yourself, you're kicking more down the road. You're either like, well, I'll clean that up before taxes are due, or, well, this only impacts me, so let's worry about that later. But that's when those hidden costs arise later, when you have to
Mhm.
reconcile things. And so I can absolutely appreciate. And so to your earlier point, not only to you want to reconcile to the T, but you want to revisit your on a monthly schedule, your uncleared balances
Mhm.
from your bank account, to see like, why are you have this inflated cash, maybe because somebody's holding on to a 50K check that they have not cleared, and you think you're working with more of a runway than you are.
Yeah, I'm glad you said that. I mentioned on the last episode that I do an executive call with my clients
Mm-hmm.
after the close of the month. And part of that, because so many of my clients have unfortunately had bad experience with bookkeepers, or like outsourced bookkeepers or firms. And when I talk to them about what has and has not been reconciled, they're like, Cash, I've been paying a bookkeeper for X amount of months, years, and they said that it was getting done. And the first thing that I do is go pull the reconciliation reports, because they're there. Like, it
They're
doesn't
there.
matter what accounting software you are in,
Yeah.
it is there. And the second thing that I pull is an audit log or an audit history. And just like,
Yes.
I'm
Mm-hmm.
not the bad guy here. I'm just reporting the news. Here's
Mm-hmm.
actually what has or has not been going on. And then the situation with the client that I mentioned previously, he was paying a couple $100s a month, expecting that his books were getting reconciled. And when I went to the reconciliation reports, there were literally zero. There were
Mm-hmm.
no reconciliation reports.
Just
And
blatant
when we
lies.
looked at the audit history, there hadn't been, he had not been in since
No login.
December of the yes. He hadn't been in since December of the previous year to close out the books with this massive journal entry. And so part of that executive summary call if they're bookkeeping clients, not necessarily CFO clients, what I provide them with is the reconciliation report to say, we have reconciled. Here is what was cleared, both on deposits and expenses, and here is what is uncleared. And for those of you business owners that may be listening, or whoever would be receiving or looking at these reports, some things that I look at, because when you reconcile, unless you have, I don't know, a handful of transactions a month, my husband's business is like this. Everything is cleared at the end of the month because there may be 15 transactions. But I look at what is not cleared and I look at the date. So for those companies that have lots of transactions or are writing checks or receiving checks, there's a timing issue. We've talked about the timing issue before, but say that I write a check on March 30th or 31st, right? That check needs to be reflected in the fact that it has left the account, that money is no longer available for me to spend, but likely not going to have been cleared through the bank or deposited by the receiver by the time the statement comes out. And so what I'm looking for on that reconciliation report is what was cleared, what was not. But then I'm also looking at what was uncleared. And if it's, I usually give it 30 days with, if it's
Yep.
within that previous month, I'll kind of just like leave it
Yep.
and review it at the next month. Um, but I'm looking for things beyond that. Like, what has been sitting here? Is it a check? Do we need to issue a stop payment? But I'm also looking at why it's uncleared. Is it a duplicate transaction? Like, did we accidentally, with QuickBooks and AI right now, it's creating a lot of efficiencies, but some of the errors that we're seeing is it wants to automatically bring in your bank transactions, and then there's business owners that are also entering them. So um, you're seeing some of these duplicate charges. And so what I would ask, we've talked about the difference between a bookkeeper and a CFO. If you only have a bookkeeper, this would be a realistic report to ask for from your bookkeeper. Can I have the reconciliation report? And can I have the audit history or the audit journal, or the audit log, whatever it's called in your accounting software? Because this then tells you, did what I pay for actually get done?
Yeah, I'm very curious. You kind of touched on one that I wanted to talk about, but I'm curious, like, what kind of haphazardry have you seen that impacts that gives like a false hope of actually available cash or something? So you touched on one that's fantastic, and that's unfortunately what my friend that I brought up earlier. Even when she got help of like, hey, I had bad accountants in the past, hired another bookkeeper, and I was so disappointed to see that this bookkeeper like did even more of that damage, where again, like instead of so in QuickBooks, there is this awesome feature called bank feeds. And so this didn't exist, too long ago, but essentially, before you had to make sure everything is booked, that you recorded every single transaction that touches cash in and out for you to reconcile against the bank. Your bank is your blueprint. Your books are what you're auditing against. And if you don't have a transaction, well, you're not going to tie. So you have to have everything already transacted. Well, with technology, there's this awesome bank feeds option available, which actually kind of, it merges with your system. And if you essentially, it adds transactions kind of like your credit card, as it sees them popping up in real life in the database. It's leaving them in this like to review section of QuickBooks. And here's where some businesses can get in trouble. The system, why it's in to be reviewed, is it allows you to make a choice. Do I have this booked already? If I do, let's find a match for it to attach this kind of like receipt, if you will, to this bank feed, but without duplicating the transaction that's already there. And if you don't have that transaction in there, then you just hit add transaction and then you allocate it to the specific account. But the haphazardry that I've been seeing with my poor friend is new transactions are coming in, it's like, oh, deposit income, blah blah blah, even though she is in the other part of it, receiving a receipt against an open invoice. Obviously you're already recognizing this here, why would you then double up? And that's just kind of the carelessness that she then had to clean up and be like, oh my goodness, going back to feeds on matching things to actually see what's duplicated and what's not. But I'm curious to see, what have you, outside of this, any other any other anecdotes that you've seen of people just kind of, not really doing the full scope, but really then giving wrong data as a result?
Yeah, there's a couple. You touched on that one. It's so beautiful. Like QuickBooks, really, it's my actually preferred accounting software. I think
Yeah,
it's very
I love so.
easy. It's very intuitive. It has undergone years of refinement.
Yeah.
And so for new business owners, it's great because you can easily jump in and understand it. But for big businesses, it still has all of the bells and whistles.
Mm-hmm.
And so they're really leaning into this AI side of things, and the bank transactions is one of them. And so I would say one is the one that you exactly touched on, and they're not catching them when they reconcile, or they're treating that as a reconciliation. They don't understand that
Mm,
at the end of the month you have to go into this reconciling
module.
module and
Mm-hmm.
actually check these boxes and make sure that
Mm-hmm.
there are no duplicates. But I would say the other like huge mistake that I see, and it's totally an honest mistake, that business owners just they don't know what they don't know. And I mean this in two
Mm-hmm.
different ways. When they get to this point of, all right, I need a bookkeeper, I need someone that's going to come in and do this, they don't know the questions to ask that
Mm-hmm.
bookkeeper to
Yeah.
that they're bringing in to understand, is this person qualified to actually run my books? Is this person, what do I look for at the end of each month to know that this person did exactly what I'm paying for? So many
Mm-hmm.
business owners that I run into, they were like, well, I was paying them. I figured that they were doing what they were supposed to be doing, but they don't know
Mm-hmm.
how to check if they were doing that. The other thing that I would say is, again, they just don't know what they don't know. And one
Yeah.
of those is, again, another example that I just recently encountered with a new client is they have a lot of parts and services. So when they create this invoice, there's so many different things that they can add to the invoice, service
Mm-hmm.
lines, part lines, etc. And they created their own chart of accounts. They created their own mapping. And it is easy to do if you understand, but most business owners don't understand the mapping. And
Mm-hmm.
so
Mm-hmm.
in this instance, when they were creating the parts or the services, there's different sections in QuickBooks. I'm speaking specifically to QuickBooks. The first part is kind of like a description, like what is this? Where should it fall? The second is it related to a COGS account or is it an
Mm-hmm.
expense account? Where is it
Mm-hmm.
going to fall on the P&L,
Yep.
right?
Mm-hmm.
And the next section is the income account. Like, where is it coming into? And for the layman business owner, and in this case, they're in the auto industry, they're grease monkeys.
Mm-hmm.
You've made comments about the subcontractors having names for themselves. Like, people in the auto industry, they're wrench churners, grease monkeys. Like, that is what they are so good at. You put them in front of a computer and they just don't get it.
Mm-hmm.
But the software was asking for the income account. And so what they thought is the bank account. And what
Oh.
happened in this is that they were invoicing, you know exactly what I'm going to say. They were invoicing, and what was happening was the invoice was showing as a deposit,
Yep.
but the service or what have you, the part was showing as an expense. And so they
Mm-hmm.
were offsetting each other.
Mm-hmm.
But in their layman head, they were thinking like income, like it's going into this bank account. And
Mm-hmm.
so those are like the little like mistakes that I see
Mm-hmm.
in like good enough. Like they don't know
Yeah.
because they're also not going in and looking at their books afterwards. But if
Mm-hmm.
you are not an accountant, I would highly recommend, it does not have to be me, it does not have to be Sassy. Like, we can get you contacts of people that can do this, but the first step in having sound good books is that initial setup and the mapping. If your mapping is off, it can mess up everything. So those are just a few of
Absolutely.
the things that I see.
Yeah. You touched on one, earlier point of kind of some owners really trusting their bookkeeper or controller to kind of go in and figure out what needs to be done. They have a hard time holding their bookkeepers accountable because they don't know all the ins and outs. They don't know what they don't know. One thing that I kind of test when I am either like hiring on a person who, whether they're a bookkeeper or a controller, but they're going to be responsible for month end close. Like, I actually ask them, like, describe your month end close process, because I want to hear where their brain goes and what their priorities are. And just to give a little bit of a nugget to our listeners, to any business owners who really don't know, like, what should I be asking from like, what the heck does month end close mean? Well, if I don't hear from my controller or whoever is responsible for month end, if I don't hear that they're starting with the balance sheet and that they are reconciling essentially every single account on the balance sheet and having a real life, like I call it the Bible, like the source
Mhm.
in real life that can validate each number on the balance sheet. So for, your cash in the bank, that's your bank statement. For your credit card liability, that's your credit card statement. For your like equity, well, you should be holding a schedule where you are keeping logs of your historical contributions and distributions. So pretty much everything has a source of truth to it. And if you're, whether it's an in-house controller, or if it's a fractional or some other friend that you have hired on, like, if they are not doing that as a part of your due diligence in closing your books, then you should be asking questions. And
I'm so
yeah.
glad you said this, because I'm going to see if I can show this without. This
Mhm.
is like part of the balance sheet. But yes, so when you can see like all my notes and highlights. This is my reconciliation Bible at the end of the month. Like, we
Mhm.
pull the balance sheet and we go through and highlight each of the accounts. And if there is an unhighlighted account, then we don't send financials to the client. We have a
Yep.
conversation in house. So I'm so glad we're aligned on that. Like, that's where
Yeah.
the reconciliation starts.
Indeed.
I cut you off though, so if you
No.
had a train of thought, but I was like,
I
as you were
totally
talking about
lost
the
it.
balance sheet, I'm like, yes, I agree. Here's mine.
And here's a thought of if our listeners are like, okay, well, why the balance sheet? They've been talking about profit and loss in terms of performance. Why are they talking about we haven't even like talked delved much deeply into balance sheet. Well, the balance sheet is the starting point, because as we mentioned, like, we're taking the sources out there in real life, and proving that we did earn this income, we collected on this, or we're essentially proving why these numbers are why they are. And it all starts out from those cash it's the first step is you're reconciling your bank statements, because you might have written a check, and I'm sure you've seen this in your life as well. Let's say you're the owner walked into the accounting office, grabbed a checkbook, wrote out a blank check. I know so many listeners who are in the field are probably like, yep, I've encountered that my whole life. But essentially, you only find out about this check when you're reconciling the bank statement. You're like, what, 10 grand left? Okay, good to know, because you weren't checking on the checkbook, because you didn't write out any checks, but you can never control when the owner decides to write out a check randomly, and they're always the manual ones. So essentially, when that's kind of the first point in closing your books and kind of finding out like, oh, I have to book a bill for this and then mark it as a check that went out. So that's your starting point. It keeps you honest with all the transactions that kind of happened in the month that at least touched cash. And then, we move on to the credit card statements. That's when you form a more accurate P&L, because you know that you've allocated things. Do they either belong on the P&L or do they belong on the balance sheet as you're reconciling these various different accounts? And then your very last step, when you've reconciled everything on your balance sheet, that's when you're looking now on your ready-made P&L. Okay, what touched my P&L? And now you dig into reconciling the P&L. So it still has a place in it, but your balance sheet is your starting point.
Yeah, I completely agree. I think I've talked about this in previous episodes too, but in the reconciliation process, you probably have one too. I use like a suspense account or a ask my accountant account.
Yeah.
And basically this is that kind of
Placeholder, right?
catch-all placeholder, a clearing account, if you will, for, like you said, wow, there's a $10,000 check that went out. It wasn't me. Where did that go to? It would get coded to suspense until I had the data to code it accurately. But it allows your bookkeeper or your accountant to continue closing and reconciling, so we can clear the transaction. The 10,000 did leave the bank. I just don't know, is this marketing, is it operations, is it uniforms, etc. So I highly recommend those placeholders so that you don't hit a pause or a brick wall in the reconciliation process, with the caveat that has to be cleared out to zero. You are not closed. You are not done reconciling until that clearing account is actually cleared out. It really is only a placeholder. So use those so that you don't get stopped, but don't let them accumulate for 12 months with things. We talked a little bit about, I've kind of touched on AI a little bit. We talked about it a little bit ago, talked about it on previous episodes, but I kind of want to dig in just a little bit here, because AI is very prevalent in the world that we live in, and it is prevalent in the finance world. I have pretty strong opinions that AI will not be able to replace our industry, because what we do is very emotional and there has to be a human level to it. What I have seen or what I have experienced is that it has created efficiencies, and it's put some tools in our toolbox to allow us to spend time in other areas. So one example is that the bank transactions section in QuickBooks, having those transactions automatically feed in and kind of be in a holding pattern, if you will, it creates a lot of extra time for me to do other things, because I'm now not entering hundreds of transactions. I'm now just going through those hundreds of transactions and saying, yep, that needs to go be posted. This is where it needs to get posted to. But AI at its core, to be used solely as your bookkeeper or your accountant or your full reconciliation process, is not something that I advocate for. In AI, there's so much that has been done. There's so much that we still don't know. And I think that we're in this in all industries. We're kind of in this weird place of, what we're doing with AI now, what are the ramifications in the future? But I had a pretty in-depth, I talked about like disagreements and like critical thinking conversations, but I had one of these conversations last week with someone, and they were asking my opinion on AI. And I said, I really do like it, but it can't be, you can't solely lean on it. And, they kind of drilled me on like, well, why not? And he said, what I have found in the finance world, and I'm only speaking to the finance world, is AI is about in this kind of situation that we're talking about with QuickBooks, it's been about 95 to 98% accurate. It misses some transactions, it miscodes some transactions, but by and large, it's feeding these transactions over from the bank account. And so when you think about it, in most of the things I do in my life, 95 to 98%, that's pretty acceptable, right?
Mm-hmm,
Like
mm-hmm.
if I fed my family 98% of the time, I would say that I'm winning in life. If I drank, 98% of my goal in water today, then I think I'm winning at life.
Yeah.
But all the joking aside, in the finance world, we talk about things material and immaterially, right? If it's immaterial, it's kind of like, not a big deal.
Mm-hmm.
Material differences are big, like they are measurable differences that change the landscape of a decision or the financials. And so when you have 5% off at the end of January, again, not ideal. I am a big advocate, reconcile to the penny, have financials that are 100% accurate. But 95% accurate is pretty close. What happens with AI if we were to lean on that 95% compounding on 95% compounding on 95%, and you do that for 12 months, we're now talking about financials that are like 80 to 85% different, right? And so putting that in terms of dollars, if we brought in $100,000 and we're about 80% accurate, your P&L is showing that you brought in $80,000. $20,000, I don't know about you, but $20,000 missing would be material to me. I would want to know where $20,000 went. That's half of a vehicle,
Yeah.
that's a couple computers, that is rent for a year, depending on your location size. And so AI at its core is very useful, but it needs human oversight still in the finance world. Do you agree, disagree? Where do you sit in this landscape of
Yeah.
AI in the finance realm?
I could not agree more. And I chuckled when you said 98% because in my mind, I was comparing to like Chat GPT. You're probably talking about maybe just like QuickBooks matching automations, which are way more reliable. Like
Mhm.
I absolutely agree. Like AI and various software tools, they are efficiency tools for your very smart, irreplaceable human being workers. If you there are certain things that you just cannot replace, and like I find that AI is still at a very laughable kind of stage. Like when I have conversations with Chat GPT, like I am schooling it in logic, because like I absolutely will not trust a Chat GPT with any like big analytical project or anything like that. I do check my work against it. Like, hey, look through this. Like, do you have any additions? Did I miss anything? Like things like that. But as far, I never start out conversing and building with AI because number one, like I have to school logic. Like basically, like, no, you can't this doesn't even touch cash. That can't be a lever to improving cash here or whatever. Like
Mhm.
it gives me such like illogical conclusions that like I just don't trust it. With enough time spent, like if I spend maybe like 8 hours on one conversation and then I'm like, no, do you want to check the logic on this? That doesn't make sense. And then it's like, oh yeah, okay, you're right. But again, like I have to then have talked to it for 8 hours for it to like be on the same page where I was 8 hours ago. No,
Mhm.
like, and so where I find that AI is an awesome tool for me because I find like I'm pretty comfortable with my brains. I trust my brains and how I would tackle this project over AI.
Mhm.
But where AI helps me is like I I have very big demands with how I want my Excel spreadsheets to be, but I am not like I'm proficient, like maybe some would call advanced in Excel, but I don't know all the amazing widgets and all the awesome
Mhm.
formulas and stuff like that. So that's where when I have built my own templates and product, I then feed it into Chat GPT to be like, hey, clean up all of my formulas to where, I may have half-assed something where like I'm using a VLOOKUP but then later that formula breaks because I added another component to it. So I just ask like, hey, fix it, like go through and put in all formulas that won't be broken if I add this other dynamic field or whatever, that. So that's where I think it's awesome, and it's so good with Excel. And I can even be like, hey, I'm in an Excel doc, and I don't know like what if formula should I use if I have this data in this column and I want this cell to tell me this. It spits out these wonderful, amazing formulas for me that it would take me way too long to come up with that formula myself. So those are the efficiency tools. But again, even in this example, you need somebody wielding those tools who kind of knows what the heck they're doing,
Yeah, and I think you're getting to the point that most CFOs, I mean controllers and bookkeepers in some situations, but most CFOs are going to a board meeting monthly, if not quarterly, and
Mm-hmm.
for sure annually. So if you're relying on AI to build these spreadsheets, the problem with it is you have to understand what was built, because to your point, you're going to go to this board table and your board members are going to rip it apart. And I mean
Mm-hmm.
that in like the most compassionate way, right?
Mm-hmm.
Because they're not finance people. They're expecting you to be the expert at the
Yeah.
table, just like the operations person or the marketing person, they're the expert at the table. And so they have to speak intelligently, but
Mm-hmm.
also in layman's terms to the rest of the table. And so if you did not fully build your workbook and you don't understand the data that it's pulling or where it's pulling from, well, then you look like the idiot, right? And and so yes, I agree with you in the fact that it is great for finding the right formulas, for finding the right variables to use. But at the core of it, you need to know the functionality of the workbook, because at some point in time, you're going to have to explain this data and where it's all pulling from, and how if we change this, it now affects this.
Indeed. And I think that just kind of, to me, it's common sense, but I think it's just to our listeners who do lean on those AI tools, to Kash's point, you don't want to lose your credibility. You don't want to just assign your homework to somebody else and not be able to stand behind it, and as we've talked about, like with Chat GPT and other AI tools, like you really have to check, that you agree, that you put your stamp on how it helped you, because as I mentioned, it makes so many errors. And unless you spell them out, there are definitely tricks to have to entice AI to spit out something more accurate one way versus another. Like if you say, please don't give me an answer until you've verified X, Y, and Z, so you can actually like program it before it spits out an answer to double check its work. But the other side of it is if you give it too long of a command of like, check this and then check this and then don't spit anything out until you've checked. If you give it too many commands, it kind of breaks and it doesn't do anything. And you're like, are you still working on it? And like, oh, you're glad you checked, because no, I'm not, you know. And so you really have to like drill into, if you are using another tool, like you don't just or what's the word, when you steal somebody else's work, plagiarize the AI's work, because you might look like more of a doofus than with your original ideas when it gets it wrong, and
Yeah.
so Yeah.
I agree because here's the thing. Like, if you look at AI, I know so many people are using ChatGPT, but there are actually some really good ones out there too, that aside from ChatGPT. But what it's doing is it's like a deeper level of Google, and it's
Mm-hmm.
spiders, right? And so
Mm-hmm.
it's taking what you're asking and it's going and spidering the web or Google, 10 pages of Google, and computing all of that information into a response for you. Here's where the problem is that I'm seeing with AI is that, and again, this is kind of the topic here is the cost of good enough, right? So if it takes 10 pages of Google, you ask it to, I don't know, build a workbook that um, accounts for COGS and inventory turn and profitability and labor, yada yada yada. It's going to build something based on the web, the world wide web. The problem is it's not specific to your business. It doesn't understand the idiosyncrasies of your business. It also doesn't understand if there is an error. So if someone did something in their workbook and it is computed over here and you're not checking it, well, now again, you're going to look like a doofus. But what I'm seeing with AI, specifically in the finance world, and you can smell it. Like when people send me stuff, I'm like, you just went to ChatGPT and asked them to put this together, but great work. Um, but what I'm seeing is their formulas don't tie out, or they don't understand where the formulas are coming from, but they got it from ChatGPT and it was good enough. Well, the problem is you don't understand the workbook, so you can't give intelligent information to us. And we're now making decisions on this workbook, or we're making decisions on the financials that used AI, or etc. And so you have to take anything that comes from AI. And I mean that. It could be from the financial realm, it could be from the business realm, it could be how to make a loaf of bread. If they spit out a recipe for bread and there is no yeast, you're not going to have a loaf of bread, right? So you should go check and make sure that that recipe is actually a legit recipe, or you're going to have problems. And so people are taking AI at face value and just believing whatever it is. I don't think they're understanding the root of where this information is coming from. The more people that use AI, and also more people that get something and say, yeah, this is great. So if someone takes this workbook and they tell ChatGPT, this is a great workbook, it's phenomenal. That workbook then is used in other situations. So if I created this workbook and then you go in and you're working with ChatGPT on something very similar, it's going to build something very similar because it said, I worked with Kash over here. She's a CFO. Sassy, you're a CFO. You're asking for the same thing. This worked for
Mm-hmm.
Kash. It must work for you.
Mm-hmm.
And now you got a doofus workbook because I told ChatGPT that this was good. And so you have to, the core of what I'm getting at is that these are great tools in your toolbox to maybe verify something or to create a foundation that you then build on, but you cannot use it as the end all be all. And the people that are worried about AI replacing their job or creating insecurities within the job place are the people that are going to ChatGPT and having it do their job for them.
Yes, absolutely. You mentioned the loaf of bread, and I have this hilarious story that I want to share. But really, like you absolutely touched on it. Like you still need to be the orchestrator, and you can't expect from your one inquiry to say like build this whole thing for me, and for them to know that the yeast has to be mixed with whatever before it turns into whatever, right? Like you have to spell each of those steps out to them. Otherwise, you're going to have a disaster that comes as a result. And I'll tell you about this example. My husband showed me this video, and I'll have to send it to you, and you'll have to post it to your channel.
Okay.
But it's essentially this guy working with AI, visual AI, and he's saying, I want to see a couple putting dishes away. And the way that AI spit it out is like, you will be like rolling on the ground laughing when you see this, because it's not human. It doesn't know how, how somebody would put the dishes away. So like it shows the couple like just placing like the first try is like somebody picks up like this huge stack of dishes and just places it like flat on the on the racks, because AI doesn't know that you're supposed to like do it horizontal or vertically, and so the guy is like, no, and so like he's kind of guiding it. The loaf of bread reminded me of I think this was like an exercise that kids had to do where like it was
Yes.
somebody's blindfolded or like somebody else's hand, or no, I might be mixing concepts, but like tell me how to make a PB&J. And then the other person is like, well, you take a piece of bread, and so the person who's acting it out, they're like putting the jam on the actual plastic of the bread because the instructions didn't tell them to like take it out of the thing, right? And that's exactly what it is. And essentially like how many tries this AI illustration of somebody putting the dishes into the thing is I can't put it into words. It is so funny, but it just kind of illustrates that you need to tell it every single step. You can't expect it to be an expert in every single step of your request, and that's where you just need to have that substance of your own. Otherwise it's going to be very evident that you're a D student like copying somebody else's homework.
Yeah. So I think that we have touched on so many great topics in this, but the real core of it is there is a cost to good enough, and good enough in my business is not good enough. I expect my bar is high for my business, for my employees, but it also is spelled out, and there's room for error, there's room for opportunity, but at the core of it, good enough is not good enough. So we are now in episode 2 of being more conversational, and we talked about last time that we were going to end with kind of like a personal question so that people could peek behind our balance sheet, and we totally forgot to ask the question. So if you don't have anything else, I think we should land the plane, but we are going to end with a fun question if you're in for it.
I'm totally in for it.
Okay.
Do you have one in mind? I haven't thought one for you.
I do.
Oh my God, I'm scared.
I do.
All right,
So
lay it on me.
I'll ask today, and then you can ask next week. So think about your fun question. But I'm going to ask you, and then after you answer, I'll give you my answer. But if any of our listeners were to find you in your free time, which I know we have so much of it, that was sarcastic for those of you that didn't catch it. But if our listeners were to run into you during your free time, what would you be doing?
Like true free time, or the only time that I get to experience
your true free time that you're enjoying.
Okay, so there are two layers to this. Like I am a geek at heart, like so I do love just like exploring. This is why I really got along with your worker, is because she's such a software nerd, and I love software. Like so I just like discovering software, or even building software, like trying to build software with existing tools, like merging tools together that already exist to make me do something more efficiently. Like so, and my husband and I like to kind of geek out on we like to fantasize about like what does it take for us to retire, like what are the steps and what are the numbers and how far are we off with them. So we do a lot of like analyses and just like talk shop about like retirement. But I guess if you're trying to get to know me behind the numbers, I love comedy. I like laughing, and comedy are like the biggest parts of what makes up Sassy, right? I love laughing, and I have always loved making people laugh. Like I've kind of always been the clown in like whatever setting I'm in. Obviously I have to be pretty comfortable with people to let them see my style of humor. But I've taken risks before and unleashed it on on people. But essentially, I love to make people laugh, and I love being silly. Like, I am probably the most immature person that I know, and kind of am unabashed about it. How about you?
I love it. I actually learned something new about you today. I know you're funny because I've got to experience it, um you make me laugh every single time we talk, but I
Yay.
did not know that you built software. So that was something that I learned about you today. But um in my free time, I love to golf. You know that.
Uh-huh.
I try to a couple of times a week early in the morning. Um, but I recently, I'll have to give the story to this because it also kind of plays to my personality. But I recently took up sourdough, so
Oh,
I make
yes.
bread.
Yes, you told
But I actually have kind of fallen in love with it. So I fell in love with golf because you can't master it. It's like it's this zero sum game. You're playing against yourself. It very much is like life in that you got to hit the shot where the shot lies. And the shot is not always beautiful. I think that all of our listeners, you can relate to this that, you know, sitting at picnic tables eating shit sandwiches. I have been in bunkers and water and all sorts of things on the golf course. But bread, we were in Hawaii in December, and on our last day we had a red eye coming back when we were walking through this, like, it was really cool. It's kind of like a food truck village, and it was on a huge like uh block radius, and throughout it there's this like garden, and then there's like this like um koi pond. Like, they just created this environment, and these food trucks are kind of built out throughout this block. One of them had a little hut, not necessarily a food truck, and they made bread, sourdough bread. And I walked in and I was just interested. Like, they have all these cool designs on top, and like it smells good. So I started asking questions like, how do you do this? How do you do that? How long does it take? And the lady, you could tell, was like starting to get annoyed with my questions. Like, um, and she finally just was like, sourdough is not that easy and it's not for everyone. And I was like,
she closed you off there.
hold my beer, lady. So we get on the plane, and it's a 7-hour flight back. And the whole time I'm like researching, how do you do sourdough? Because I'm going to prove this lady wrong, as if I'm going to go take my sourdough bread back to her and like prove to her like I can do this. But um, I researched how to do it, how to make this starter. We got home and there was Amazon packages on our doorstep of like all the things to make this sourdough bread. Needless to say, here I am 3 months later making bread on the regular, because some lady basically told me that I couldn't. And I'm like, lady. So, moral of the story, if you tell me that I can't do something, I will find a way to do it.
I love the stubbornness.
Yes,
And I
it
can't
is.
wait to try your sourdough. And for our listeners, something to look forward to. Miss Cash will be visiting me in mid-April, and I am taking her to see Miss Mel Robbins, whom I absolutely adore and have been. I only discovered her last year, but I just love her like honesty and kind of the transparency without like the beating around the bush. Like she seems very caring but blunt, which is very my style. And there are just so many nuggets that I took away from her. And actually, starting a podcast was one of the things where like initially I was like, oh man, so many people already have done it. Like me starting out, like I'm one of, this huge sea. How is that ever going to work? Well, that's something that she also struggled before she became like what she's like number one or top 10. I don't know. And she had the same hesitations, like people already have done this, blah, blah, blah. But I don't know. Have been listening to her stuff on repeat last year, kind of took a pause on it for tax season, but I can't wait to do it again. Her current tour is the Let Them tour, which I think is one of the first audio books that I heard on her, and I can listen to it all day long. Like, there's so many good nuggets about kind of interacting with the world and different relationships, and sometimes kind of letting the uncomfortable things be, So I can't wait to learn together and to talk post the show with you. But I can't wait to just see you in person. And our audience, we will be recording some collabs in person, and it'll be nice to actually have us on one screen.
Yeah, we'll be on one screen eating bread.
That's right.
Awesome, guys.
Alrighty.
We'll see you for episode 9 next week. Thanks for listening.
Thank you, team. If this conversation resonated with you or even challenged you, that's a good thing. It means you're paying attention. Take one step towards reliability this month. Schedule the reconciliation, review the reports, ask better questions. And if you're finding value in these conversations, we'd love for you to follow, subscribe, leave a review, and share this episode with another leader who needs to hear it. Because we're not just talking about clean books, we're talking about leadership clarity. So when you're ready, come back and keep going past the balance sheet with us.